Hey everyone, welcome back to Money with Mission. I am Felecia Froe, Dr. Felecia Froe, your host. Remember, Money with Mission's vision is that every woman have the financial ability to walk away from any job or relationship that is not in her best interest. If you want to know more about how I got to this place in my life, from a urologist to a real estate investor to an educator, helping other professional women get out of the rat race and have that ability to leave either job or relationship, whichever one is not working for them, or to work at a different to work in a different way, come check out some different things. Go to the website, moneywithmission.com. My story is there. I do master classes on a regular basis. You can find out when those are on the website. And I would love to get to know you. Today on the podcast, we have Fred Moskowitz. Fred Moskowitz is an educator and best-selling author who has trained countless investors on how to create passive income streams of their own. His mission is to empower people from all walks of life with a higher level of financial literacy. As a fund manager, Fred manages a mortgage note investment fund and is considered an industry veteran within the note investing area. Fred teaches the concept that individual investors are able to step into the shoes of the lender through note investing and effectively be the bank. I don't know how many of you know how money works through a bank, but if you can be the bank, you are in the spot. Fred takes pride in collaborating with investors to help them grow and profit in the note space, as well as being a trusted and valued resource in the area of alternative investments. Fred's latest book, The Little Green Book of Note Investing, is a testament to his commitment to diversifying investments and shedding light on the power of mortgage notes as a compelling asset class. Welcome to the show, Fred. I love learning all these new and different ways to invest alternatively off Wall Street and have passive income. Let's get into it.
Be the change you want to see. Make a difference by giving your money a purpose, a mission to do good. Welcome to Money with Mission, where we show you how to create passive income so that you have options for how to work and how to live your life while leaving a legacy of positive social impact.
Hi, Fred. Thank you so much for coming on.
Hello, Dr. Felecia. Thank you for having me.
You're welcome. I'm looking forward to learning about what you do. But before we get to that, were you born knowing about money, or did you learn about that as you were growing? And how did you learn about money?
That's a very interesting question. The way I learned about money, and this is probably going to sound very familiar to many people, I grew up hearing this messaging at home, which was do good in school, study hard, get good grades, get a good education, and then that will set you up to get a great job and a stable job,
Yeah.
right?
Yeah.
That was what worked for my parents' generation, and that's what I grew up learning at home. And so I went and pursued a career as a computer engineer.
Okay.
Loved computers growing up, and I did that, and I came out into the job market during a very interesting time because it was just a couple of years before the beginning of the dot-com boom.
Okay.
And so I was so drawn to that, and I went right into the tech industry, and it was exciting. It was a roller coaster ride, and there I was during the birth of the internet, and it was being turned on for the masses, and I was involved in that, like,
Hmm.
really exciting times. But what I learned was that the tech industry is very cyclical. It's a roller coaster ride. And so we went from the dot-com boom years to then the bursting of the dot-com bubble,
Yeah.
and a lot of turmoil. We had the September 11th terrorist attacks, a lot of uncertainty in the world. The job market for the tech industry was in the toilet. And I saw that this wasn't just a one-time thing, especially in my industry, very cyclical. And so I realized that I was taking on this huge risk because I was relying on my paycheck as my only source of income.
Okay. Hmm.
And so I often talk about this very important question is how risky is your paycheck? Have you ever thought about that? Because it doesn't matter how good of an employee you are, how good of an engineer I was. If things are not going well at the company or in the economy, I could quickly lose my job through no fault of my own. And so this is what led me to start pursuing alternative sources of income
Mhm,
so that, yeah, I'll have my paycheck, but I want to have something else also
mhm,
supplementing that. And so with that, I turned to alternative investments. I got involved in real estate. I was building up a portfolio, generating cash flow. But then I learned about a niche area of real estate called note investing,
mhm.
which is instead of buying and owning the real estate, you're investing in the debt. You're buying the mortgage loans and holding those as you're stepping into the shoes of the lender. And this is a really niche area of real estate investing. A lot of investors, when they think of a note and a mortgage on a property, they think about it from the perspective of being the borrower and not as being the lender.
Correct, yes.
And as investors, we can buy those loans and own them and be the one receiving the monthly payments instead of the one making the monthly payments, which is a huge paradigm shift.
100%. I'm gonna back up a little bit. You talked about you were an engineer and you were doing this on this roller coaster ride in the engineering field. I had a guy I talked to the other day who as engineer, also mechanical engineer, and
Mhm.
he remembers getting into real estate and alternative investing because his superior, his boss said, "Don't invest in tech, invest in something else." And it was just like just exactly what you said. It was like that guy or woman, I don't even know, said was seeing all the things. I don't know if this guy had seen all the things like you've seen with the dot-com burst and all those other
Yeah.
things that makes you realize my check is not that safe. And I know that there are physicians out there and that my check is safe. I get da 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 da. But is it really? You are at the mercy of an insurance company. You're at the mercy of the income of your patients as to whether or not they can pay you and pay their insurance and what the insurance company is going to pay you. So, thinking about how secure is your paycheck is a very, very different way to think about that paycheck. And that is exactly what Fred was talking about, and realizing that he had to have something to fall back on, something else coming in so that paycheck becomes irrelevant because it's not in your control. That's the
Yeah.
bottom line. It is not in your control. Anyway,
Yeah.
sorry, I had to get there. And then you
No,
start, I wanna just make sure everybody caught that.
that
I love that. How secure is your paycheck?
yeah.
Sometimes feel very insecure when you start thinking about it like that. Then you started with regular real estate investing where you bought houses. Did you buy and flip? You bought and hold, or did all the variations of those things?
Bought and hold.
Okay.
Mhm. Yeah.
And then did you get
And ju
tired of being a real estate? Did you just get tired of managing that? Were you managing it and doing all that stuff too? What happened?
what happened was eventually I got to a point where I said, "Do I really wanna keep scaling this larger?" I was doing well with it. It was
Yeah,
doing well,
yeah.
but eventually it gets to a point where it starts to affect your quality of life and how many properties can you own and still have a decent quality of life.
Mhm.
All of these thoughts were coming
Yep,
to me.
yep.
And then I realized with node investing, it's a lot easier to scale. That was one of the big benefits that attracted me to it is that you could build a portfolio with hundreds and hundreds of notes theoretically and be able to scale that. And that's something that's a lot harder to do with traditional
Mm,
real estate. And there's ways to do it, but it's a lot harder to do.
yes. So I want to break it down for folks who never heard of a note.
Yeah.
I remember the first time I heard a note and I thought about a piece of paper where I wrote something down. I'm like, what are you talking about? A note.
That refers to, yeah, that's a great question. That refers to a promissory note, right?
Okay.
Promissory note that you sign that says, I promise to pay X amount of dollars per month until such and such date, which will pay off this debt of in the amount of X,
Okay.
right?
Okay.
That's the promissory note. And it lays out all the terms, the interest rate, when the payments are due, where they need to be paid, all of those details. That's the promissory note. Now, along with that, there is another document called a mortgage, or in some states, it's called a deed of trust if you're on the
Uh-huh.
western part of the US. That's the security pledging the collateral that goes with that
The
note.
note.
Yes, and so this is what gets recorded on title as a lien, so that if the property is ever sold or refinanced, that lien has to be addressed. It's in the public record, it's recorded at the county courthouse. And so that's the primary mechanism where banks and lenders have security, they have collateral backing the note,
This note.
backing that debt. Mhm.
So,
And
because I
so
think most of us, I mean, when we buy our house, you think, "I signed the thing, it's on the mortgage." I don't think people think about that as 2 separate things. The promissory note and the deed of trust that secures the promissory note.
correct.
That makes
Yeah.
sense to you guys?
Yeah, that's a little bit of the title mechanics of how that works. But back to your original question, what is note investing, right? It is when a loan is created and an investor can step in and buy that loan. You don't have to be the one, you can create one, originate one yourself. However, there exists a secondary market where loans are bought and sold every single day. And what's interesting is loans are sold on the secondary market at a discount, sold for less than the amount owed. And so when you buy it, if you buy the loan at a discount, now the rate of return, it
Goes
goes
up.
up.
So,
And so
I mean,
that's beneficial, and this exists so that loans can be created and then sold on the secondary market, and there's this velocity of money that happens. Those loans will get put into Wall Street securities or just traded on the market, and I bet most of you listeners out there have experienced this. You go out, you buy a property or you refinance, and you sign all the loan documents at closing, and then you start making your payments every month. But then within 3 to 6 months, you get that letter from the lender
exactly,
that says,
exactly.
"Dear Mr. or Mrs. Homeowner, please be advised your loan is being sold.
Yep.
Here's the new lender's name and address and contact info. And starting next month, please send your payments to the new lender. And by the way, don't worry, none of the terms of your loan are changing. The interest rate's the same, everything's the same." And so that means that was your loan sold on the secondary market, and this happens all the time, like
Why do
every day.
why do banks sell the loan?
Why do banks sell the loan? It's very simple and straightforward. It's because banks sell the loan to recapitalize so they can turn right around the very next day and originate a new loan for someone else. That's their business model. They do it in a high velocity, high volume. They make their money on the fees and the points and all of that.
Mhm.
It's a low margin business, but they do so much volume that it makes sense for
Okay.
them. And so they create loans, sell them, and then turn around and do it over and over and over again. If you ever go onto Fannie Mae, Freddie Mac's website, they'll have listed there publicly, because it's required for public disclosure, all the loan sales for the previous quarter. And you'll see these huge gargantuan loan transactions with thousands and thousands of loans, millions and millions of dollars
Mhm.
that they were sold to some Wall Street institution or whoever bought those.
Right.
So this goes on and it trickles down at every level. So for smaller individual investors,
Mhm.
we can buy loans. We can buy loans from other investors. We buy loans from mortgage note funds, from hedge funds. There's a lot of options out there. So that is really a quick, high level overview of the secondary mortgage market.
So, recap, the reason your original lender sells the note at a discount is because they can make more money originating a new loan, correct? And just can do
Yes,
like you said, they're not just continuing to originate loans, they make what they are looking to make, whereas the person or the entity that's buying those is making money a little bit differently.
correct.
Okay.
Yeah. They have a different time frame. different risk tolerance, all of those things. And so for the investor, it's a huge benefit. They have capital, they can place that capital to work. Maybe you have capital in an old 401k, an old retirement plan that's you can invest that. And now you buy a note and you're receiving a nice rate of return. And it can be fairly hands off as an investment, passive,
Mhm.
even if you want to structure it that way. There's options. And so that's very appealing for a lot of investors. But what I love is that when you do that, the note you invested in, it's backed by something as collateral with tangible value. It's a
Right.
home, just
Yes.
like the homes that you and I live in all
Yes.
across the US.
Yes. Yes.
Yeah,
So it is owning real estate without owning real estate. You own the paper that is backed by that real estate. So managing it is not your problem. All those kind of things are not your problem.
correct.
People are paying their bills. How do you, so I think about that and I think about big companies doing that, like you talked about. How does an individual invest in notes?
Yeah, that's a great question. There's 2 ways to get involved in note investing, and I call this active investing or passive investing. Active investing is when you can go out to the secondary market and buy notes, buy individual loans, build a portfolio that way and manage that. And that's more hands-on. So for someone that maybe has a lot of time and wants to get involved in this business, it is an actual business to be
Hmm.
in,
Hmm.
then you do the active approach, and that's great. You can do really well with that. Now, for some people, that's not appealing because you may say, "Hey, I don't have a lot of time. I'm focused on my career, or I'm busy running my business or doing what I
Life.
do."
Yeah.
Yeah,
Running
life.
life. Yes.
And so a passive investing approach might be better where you can invest in a note fund. In a note fund, what that is, where the fund manager is raising capital from investors
Hmm.
who want passive income. The managers, they go out on the secondary market and now they're buying notes in bulk quantity because they're working with a lot more capital. And with that, they can negotiate better discounts as well on the purchase, which is really nice. And so the benefit for the investors is they get to leverage the expertise, the experience, the relationships that the fund managers have, access to notes, all of these things, and they're receiving a passive return in exchange for that. So that's a great arrangement. And for some people, that works out much better. I say if you're investing out of a retirement account where it's required that it's hands off to you, and you're not allowed to directly manage the asset, investing in a note fund can be a wonderful option. And so there's really not a right or wrong answer for this. It just comes down to the basic question is how much time do you want to spend on this? How much time do you have?
And it's I believe it's more than just the time you spend researching the notes, it's the time you have to spend getting to know people who have notes to sell. Because every real estate transaction I've ever done is based on a relationship, not just the thing. So, I spent lots and lots of years getting to know different syndicators and operators to be able to introduce them to people for people to put their money to work.
Exactly.
It's not an overnight thing. You can 100% learn how to do it. You can 100% spend your time building these relationships and then make the money. And if you just value your time, if you put the dollar amount on your time, you'll see how much it costs. It might be easier, better, faster, more efficient to build a relationship with someone who already has all that in place, manages a fund, invest with them. You definitely, if you're going to say, let's say Fred is a fund manager, it's easier to spend some time with Fred, a month talking to him off and on, getting to know him. And then now he can take your stuff. He already knows all those people in them. He's got a trail of people behind him that have these notes to sell. Or you could go meet the trail of people behind Fred and make sure they know you so they can sell to you. Anyway, I won't go into that anymore. But that's
Yeah, I love what you said. This is such a relationship based business. I think most businesses are actually.
yes.
But if you're going to take this business seriously, you need to get good at building and nurturing relationships. It's such an important skill in life. and it's worthwhile to spend time on it every single day.
Yes.
Every single day.
Yeah.
There's so many benefits that come through relationships.
Yeah.
I love that. That's one of my highest values in my business is relationships and building and nurturing them. And it's something I enjoy. I really do. I genuinely enjoy that. I enjoy connecting with investors, with other people, learning about what they do, what their challenges and struggles are. And a lot of times there's ways you can help them. You can add value to others. And that's
Yeah.
wonderful.
Outside of what you do as a
Yeah.
manager and outside of that, it is about the relationship. You trust people. You should trust people and know the people you're handing your money off to put to work for you. I know so many of us take our money and just give it to the 401k, whatever, and you have no idea who or what that is, the name, Fidelity, Vanguard, whoever. You give it to them, and magically you're supposed to have money when you're ready to retire.
Yeah.
I like knowing who I'm handing money to. And if it's lost, I know they're going to talk to me about it and we're going to figure out what happened and how to go forward. And every deal does not go great. Those of you invested with me know every deal does not go great. But you'll talk to me about it and I'll explain to you what happened and it'll make sense. That's the bottom line. Is, well, when the market falls, why did that happen? Because somebody didn't like whatever somebody said that day. Just all craziness. Anyway, you wrote a book to help people understand this. What's the name of your book? And give us an overview and how can people get it and get into some stuff like that.
Thank you. Thank you. Appreciate you asking. The book I wrote is called The Little Green Book of Note Investing. And what I set out to do with this is to provide a high level overview of what note investing is all about, what it is, how it works, how does the secondary market work, and we cover a lot. We cover how to find notes to buy, how to evaluate them, how to perform due diligence,
Mhm.
whether you're looking at investing in notes individually or a note fund. How do you perform due diligence on a note fund? Super important. Another area I spent a lot of focus on is how to utilize retirement accounts for investing,
Okay.
investing in notes, because it's such a powerful combination. Note investing is an activity that generates tax liability. There's no deductions, there's no depreciation like there is in real estate. And so if you can do note investing in a tax advantage account, it's such a huge advantage
Yeah.
because you get that preferential tax treatment. So I teach a lot about how that works. There's some particular rules that you have to follow and everything, but there's a process for everything and a way to get things done. And we go over that in the book. And so again, it's called The Little Green Book of Note Investing, and it's available right on Amazon.
Why green?
Why green? Color of money, right?
You like
Yeah.
got it, got it. We were talking a little bit offline and I forgot about this. I have some folks in my world who do tax lien investments, and I think
Mm.
some people call those notes. And then we're talking about note investing. And what's the I know there's a difference. Help let's explain it to I know the folks that are the lien investors do listen. So let's make sure they understand what the difference is.
Yeah. The difference is, tax liens, there's huge variation from state to state, county to county. First of all, tax liens are created by municipalities when a homeowner gets delinquent on their taxes and there is an arrears balance. And so the county wants to get their money. So they will sell that debt off to the highest bidder,
Mhm.
and so this way the municipality gets paid or the county, they get paid immediately. And now the bidder, the buyer of that tax lien, they are in a secured position against that property and they're accruing interest. And it may be, depending on the state, it could be at a high rate. Some of
Mhm.
those are in the teens, right?
Yeah. Yeah.
And so up until the property owner pays off those taxes, that debt is accruing there. And so that's in a nutshell what it is. Now with mortgage note investing, it's a longer term play, right? Loans might have a maturity date that's 20 or 30 years out. Even though the statistical lifespan of a mortgage note in the United States, it's 5 to 7 years
Okay.
before the property gets sold or refinanced. That's typical.
Mhm.
But these are longer terms. So you're doing that work, that initial due diligence and getting the loan set up. You're doing that once and you're going to have a longer term payment stream. It's a little bit more stable.
Just the mechanics of the mortgage note. We bought a group of notes. Now those homeowners are paying this company, they're paying their mortgage payment to this company, correct? That just bought their note. And then the investors are getting paid out at whatever percentage the fund is set up at, or how does that work?
It usually that's how it is, but there's so many variants of that
Okay,
across the industry. But usually there'll be some predetermined rate of return that's issued out to the investors.
got it. How does somebody vet a fund manager for notes?
Great question. It's not unlike vetting any person that you're considering to be a counterparty in a transaction or
Uh-huh.
anything you do, any
Mhm.
deal that you're going to invest in. You look at the person's background and history. You can look up court records. Are they a frequent flyer at the county courthouse in lawsuits and things? You can look all that. It's in the public record, right? You look at the person, you look at the entities they're associated with for court history. You run a background check even on all the principles of the entity and look at any other entities they're involved with. Also, beyond that, you reach into your own network and ask, hey, do you know Joe?
Mhm.
What's his reputation like? He's a business person. You do that. Call people. Talk to your attorneys, your CPAs. They all have great networks. You can ask around. And the way to start all of this is using a tool that's available to all of us is Google. Just start out by, do you know how many times I've heard stories of people, they got into an investment and the person didn't do what they were supposed to do or
Mhm.
wronged them in some
Mhm.
way. And then I hear about this and I knew that person is a known and then you say, if you would have spent like 10 minutes Googling that person, you would have seen a ton of stuff come up that would make you at least be on the alert and dig a little deeper and
Yeah.
probably saved you a lot of headaches had you done that.
Mhm.
But so always start there. That's the easy one. But then go further. And if you don't know how to do some of this stuff, get get your attorney or call your attorney up and see if their paralegal can help you do some research
Yeah.
that they'll and pay them an hour of their time to help you with that. It's gonna be well worth it. It's like an insurance policy, and
100%.
it's all about, building relationships. If you're in an investor community and well known, you ask around. You can ask around, "Hey, who's done business with this person,
Yeah.
and what kind of an individual are they, and how do you handle when things don't go well?" Which is super important
Yep.
question to ask.
Yep. Yep. I I love it, and most of what you talked about is having a team to help you. You of course, I wanna talk to you and I wanna hear everything, but I trust everybody is my first that's my instinct is to trust. And then I have my friend, Billy, who now comes in and secondarily interviews somebody and has said to about a couple people like, "No, I don't think you should invest with them. That didn't look good to me." I was like, "I'm good." That's after I made some investments in some people who turned out to not be so trustworthy.
Mm,
So, having that if you don't have a good friend that you feel like has a better instinct than you and is a more of a distrustful person first until you build the trust, then you gotta have that paralegal, that CPA, that you've gotta have somebody on your team who's not just looking at it for the money. Because sometimes we get that. We can be blinded by that 35% return or whatever you're being told to go into it. Then,
they're
if you get
impartial.
Yes. Once you get to that place where it's like everything looks good and you feel good talking to the person, don't invest everything there. Start small. Go the lowest you can and let's make sure things are going well. What you can afford to lose, what you can stand to lose. We all get sick to our stomach when we lose. We all do. It doesn't matter. But you're not going to be so sick that you can't move forward. Does that make
Yeah.
sense? You can just it's very, very important to vet who you're giving your money to make it work for you. You wanna make sure that they're making it work hard for you, and it's them. So big on that one. I just love.
That's so important. It is. And whether you're a passive investor investing in a deal or an opportunity, or even if you're just doing a business transaction, what if you're buying some notes? Or what if you're buying real estate from a private party? Are they someone you wanna do a transaction with? Is it gonna be a good experience for you, or is it gonna be full of grief and sleepless nights, pulling your hair out, and lots of issues and resistance all along the way? It may be a good deal, but is it worth all of that agita and stress?
Yeah,
Maybe not.
no,
It may make you think twice about it because not everyone does business the same way. And so that's something else to consider. Is this someone that you can have a good experience with in a business transaction? And
100%.
that's something that goes for just doing business all across the board, working with a vendor, working with a counterparty in a transaction, working with a sponsor that you're going to invest money in as a passive investor, any of those scenarios.
I agree.
So important. I always look at it from the perspective of, hey, let's build a long term relationship. And I want things to go so well, so smooth that the next time that there's an opportunity, they're gonna pick up the phone and call me
Mhm,
first,
mhm,
ahead of
mhm.
anyone else. That's my goal. That's what I want to have happen, and that's the experience I want others to have when they work with me.
Yeah,
When we do a transaction together, whatever it might be, a vendor, an attorney, I want if I call my attorney up and say, "Hey, I have something urgent. Would you be able to move my thing up to the front of the line? Can you do that? Can I pay you extra if that's what it takes or whatever?" And most of the time they say, "Yeah, Fred, absolutely. We love working with you. We'll take care of it. Don't worry." That's the best outcome when you
yeah,
have that kind of a relationship with the people you do business with and your partners. It's powerful.
yes, the best. Thank you. That was great. I'm gonna circle back to your book again. I know we talked about it, but I want that to be the last thing we talk about. The Little Green Book of Note Investing gives you a high level picture of what mortgage note investing is. And it sounds like from what you said before, there's enough in there where you can learn how to do it yourself, or you can learn that it's so much that you don't want to do it yourself, and you get in touch with you
You
to
can learn
that.
how to get started.
Yeah.
Yes.
Okay. And you manage a fund as well as help people and teach people, educate them on how to do it themselves?
I do. I
Okay.
do. I love education and teaching, and it's a big part of what I do, and I find it so rewarding. I really do. Really enjoy it. And this type of financial education, you don't learn it in school. You don't learn it anywhere except where you take the initiative to
Mhm.
pursue it and
Yep.
go attend a workshop, an event. You read books, you listen to podcasts, right? That's how you learn. And note investing is a learning by doing business. It really
Mm,
is. You have to get in there, roll up your sleeves,
mm.
and get hands on, get dirty, and build up your experience. And I always tell people if you're getting started, go with safer notes that are clean, they're low risk. Yes, you're going to earn a lower rate of return, but it's a great way to learn. Or maybe if you want to learn, you can learn by investing in a note fund where you have experienced team working alongside you. That's another way to learn. That's wonderful because someone else is in the driver's seat, but you can see everything that's happening and pick up your experience that way. And over time, we grow and evolve and you can take on more complex deals, more complex projects, and that's the natural progression of an investor.
Yeah, that's a great thing to even say about investing with someone. So you don't have to necessarily do your first one on your own. You invest in the fund and you had a conversation with that fund manager. I want to learn how to do this. If you've got a fund manager that's willing to teach you while you've invested, that's amazing because then you get what you put your money into, tend to pay attention to, and you will learn it
Yeah, that's so true.
faster than if you're just sitting there reading the book and you haven't really just get in there and start doing it and learn by doing, as Fred said. Fred, how can people get in touch with you?
Yeah, thank you. I appreciate that. The best way to connect with me is to visit my website, which is fredmoskowitz.com. And I completely understand that some of you may prefer a little bit of an easier spelling. So you can also go to giftfromfred.com and that'll take you right to my website. You can connect with me there. You can request a special report that I have on note investing. I'm happy to send that out to anyone that requests it. And you can learn more about my book. I always love connecting with investors and learning about what they do, especially in this alternative investment world.
Mhm.
People are into all these different niches and interesting things. So I always love learning about that.
Yeah.
So yeah, please reach out. I look forward to connecting very soon. Thank you.
Hey, everybody, I know everybody's doing something other than just listening to this podcast. So everything Fred just said is going to be in the show notes. There'll be links there. You don't have to remember how to spell his name. We'll get it for you. Thank you so much, Fred, for being here. This was really, really good and very informative on so many different levels, not just about notes, but about vetting, about doing it yourself and doing it with someone else. It was really, really good. Thank you so much.
Thank you. Thank you. It was
Appreciate it.
great being here.
Awesome. See you guys next week.
You've been listening to Money with Mission. There are projects happening right now where you can have a great financial return while positively affecting the lives of others. To learn more about our opportunities, go to moneywithmission.com.